We got a good number of people in here. Let's start it out. We are here for the fourth episode in our Adapt or Die series. My name is Charlie Bathgate, and my esteemed guest for the day is none other than Chris Cady.
Thank
Chris,
you all for coming.
say hello, Chris. If you haven't caught the first 3 episodes in the series so far, highly suggest you going back to our YouTube page and checking them out. We got an interview with Wall Street Jesus, interview with Ron Friedman, who's the creator of Trading the Post, one of our core strategies and methodologies here. And then my last interview was with Lucci. And if you're new to the series, then welcome, pull up a seat. We're here to talk about a number of things. I mean, as you can guess by the title, Adapt or Die, like how do you adapt to, which Chris loves the extreme nature of this title. How do you adapt what you're doing when what you're doing isn't working? Right? How do you react when your back is up against a wall? How do you change your behavior? We all know how hard changing your behavior can be, but so often in the markets, that's the name of the game. That's what's required of us. So my guest today, as I said, is Chris Cady. Chris, many of you know Chris because we've done a number of interviews with him before, webinars before. You can search him in our YouTube channel, and a bunch of really great stuff comes up. He's also the host of the Misfit Happy Hour, which is usually taking place Wednesday after the close right now, but we've sort of taken it over, for this series. It'll be back next week, so don't worry, all you diehard Misfit Happy Hour fans. Chris, for people who don't know you, can you give everybody like a quick bio,
Sure.
background?
Just let's timestamp it. Today is June 1st, 2022. Currently, the S&P is approximately 4,100, and the price of crude is at 115 to 120, approximately, depending on the minute that you look at it. My bio is that I was born here in New York. I grew up in Connecticut. Made it through the school system in Westport. Moved to Colorado, became a ski instructor, took a summer job on the floor of the exchange when I was 19, and worked my way up from being a clerk to being a member of both the CME and the New York Futures Exchanges.
Youngest member ever, right?
Yeah. And that was courtesy of Walter Frank Sr., who was chairman of the New York Stock Exchange, who believed in me. And then went to work for Victor Sperandio of Trader Vic, who looks at markets from a sort of an actuarial perspective, similar to an insurance company. Like, they don't want to sell insurance to a 95-year-old man. He may live to be 100, but the odds don't favor that. That was kind of Victor's approach. And he had many rules. He was a leader in the beginning in the options market before they even had computers and things like that. And he taught me about time and things of that nature, because obviously with an actuarial basis, time is important. Then I went in 1991 and attended a class with Peter Stottlemyre and Steve Hawkins, and they became my teachers since then until now. And so I come from both a floor background as well as then made the transition to electronic. I've gone from being a broker on the floor, a local on the floor, then to an options market maker, then to an executing broker, as well as an options market maker, trading for my own account and training other traders for large institutional firms, and then strictly trading for myself, which I do now, continuous now. I've been trading since April of 1980.
Awesome. That's dope. So there's a lot of reasons why we have Chris come on and talk about topics like this, and a lot of reasons why we have him as one of the educators in the master course. And we're also working on some stuff dedicated with just Chris, for people who are like, I only want to learn from Chris Cady. And one of the reasons why is because Chris has all the experience that you just heard him talk about. He has been doing this at the highest level for 40 years, and has adapted to a number of different market environments, challenges, gone from, in person on the floor to, on the screens, which, was sort of a mass extinction event, in of itself. And that's just to name one of many, many things that Chris has had to, kind of go through and adapt to. And then Chris also has a really incredible way of talking about psychology and the mind. And he's got a deep background in meditation and the study of the mind. And that affords him, in my experience, the ability to talk about some stuff on a psychological front and articulate things that most people cannot and that a lot of traders cannot. So, that's one of the reasons why I'm particularly excited to talk to you today, Chris, about this subject matter today. I think it's going to be fun. So,
Yeah, and no one will die. I mean, trading is pretty traumatic, and so it's important to recognize that when we're teaching, and we're hoping that people are willing to entertain the thought of changing, which is both a mental and a financial risk, that people aren't anxious, right? So the idea is that while the title is dramatic, our teaching is more, shall we say, it is an easier progression to become comfortable, because you have to trust us in order to actually risk the money and then to actually learn the process yourself and take ownership of it.
Yeah. We're not going to kill anybody in here today. We
right.
promise.
There's no dying, and God knows if you're trying to survive in these markets and you're interested in learning, finding a good teacher is really, in any practice, right? It's really important to find a good teacher. I'm honored not to get schlocky, but I'm honored to be part of this. So anyway, Charlie, go ahead.
Yeah, well, that's a really good prompt for me to talk about the master course real quick before we get into the meat of this. So the whole reason we're doing this series is a lead up to the next live session of the Sangalucci Master Course that starts June 6th, which is this coming Monday. So coming fast. We've been doing this course in this sort of current version for at least 5 years now. The lineup of traders who are teaching it is absolutely incredible. I think there's now like 100 years of combined experience between the top, 4 guys who are teaching it, which is of course inclusive of Chris, Lucci, Wall Street Jesus, and Ron Friedman. So you can learn everything about the Sangalucci Master Course and go check it out if you go to sangalucci.com/MC. We originally we were doing a discount, $500 off. You can use coupon code MASTER500 to save $500 off. We were originally going to limit that to 10, the first 10 people who signed up. And then my team was just like, yo, that is a nightmare. When you do that, you've screwed us, because we get people emailing us being like, hey, I got in at the 10 spot, right? And I just need to line something up. But then, I'm going to pay at this level. And we've also been getting a ton of emails from people who are honestly getting squeezed right now by the nature of the market, by the economy. So we're just saying, hey, if you sign up before class starts on Monday night, 7:30 p.m. Eastern, that discount code will work for you. You can save $500. So Master 500, you can use that at checkout on the payment plan or the single payment option. Questions, anything like that, shoot us an email or use the help chat on the website. All right,
Charlie, doesn't that leads to an interesting conversation about experience versus actually having a good teacher. And I'm starting to, my friends in the professional sports end of things, and surfing, windsurfing and skiing, have always said it makes much more sense to buy the knowledge than to actually have to go out and learn it the hard way. And then I was listening to a psychiatric lecture, and they were saying that the problem with experience is that it comes too late in life, right? As though by the time you've had the experience to learn, the opportunity has passed.
Mm-hmm.
And so the burden of that, my pitch is that the burden then becomes on us as teachers to teach the right thing for what's going to work in the future. But the idea of buying the knowledge is probably psychically and physically a better deal than actually having to learn it on your own.
Yeah.
And go ahead.
I think coaching, good coaching and high quality education, which is distinguished from a lot of the education that's offered out there in the public now,
right,
is kind of having a moment now in like a lot, psychology and high performance, because people have recognized that at this point, yes, you can learn a lot of things through experience on your own, but the question is like, how long is that going to take? Do you actually have a process set up to internalize what your experience is telling you, and then practice that skill set and execute on a consistent basis? Or is getting exposure to somebody like Chris, for example, who had, like you, Chris, who has the level of experience you have, who has practiced the skill sets for not 10,000 hours, like I don't know how many hours you have in front of a screen at this point, but way more than 10,000. Is that worth, especially when you're a trader and how much money you can make when you trade? Yeah, most people
or
would say it's worth
lose,
it.
right? The idea,
Yeah.
or lose, right? And so,
Right.
and as well as understanding that the experiences that you're going through, the bad ones are not necessarily going to repeat themselves in the trading market.
Right.
So it's
Yeah.
like, oh great, I learned not to do that again, and that doesn't happen again.
Right.
So that's a tough, anyway. So yeah, I always thought, yeah, no, I was headstrong like most traders are, right? And I was like, in my windsurfing, they were like, no, just learn, pay to learn, pay for the knowledge.
Well, that leads us right into this. So what was the first time that you said, I got to learn this skill set? I'm going to go actually get taught by somebody in a sort of a formal education setting rather than learning it on your own?
It was interesting. I listened to Lucci's adapter die thing, and he was basically saying that he could look at the crypto with a new look. He was not angry. He was angry at Shopify for some reason,
Right.
as though it had betrayed him. And no disrespect, Mr. Lucci. And so, but he was essentially encompassing a beginner's mind there, right? He was looking at something new, and his emotions weren't. He was not interested in revenge or hurt or traumatized by what shop had cost him.
Right.
To answer your question, I was young, and so it was easy for me not to know anything and to admit it, and so I had a natural beginner's mind.
Mm-hmm.
And I had willing teachers. There was for people who weren't or not familiar with what the floor was like, there was a movement in the very beginning, when I first started, that basically the people, the older guys, 50 and above, were more interested in taking younger people and teaching them to trade than they were in financing a condominium complex, because the prevailing thought on the exchange was that if you taught someone and you got the predominant arrangement was they put up the money, the backer put up the money and taught you, and they kept 50% of what you made, and it was
Right.
settled on a yearly basis. So you just had to make sure that you were up at the end of the year, and then you'd start over at zero at the next year.
Wow. They did it on a yearly basis. That's
Yeah,
wild.
they settled it on
Interesting.
a yearly
Yeah.
basis, and so you could
Yeah.
get a draw right against it, but
Right.
uh, it was settled on a yearly basis. So there was a natural elder storyteller, younger member of the tribe relationship that
Mm-hmm.
took place, that allowed that knowledge, which is now, unfortunately, the knowledge pool of the floor is scattered, and the exchange has missed capitalizing on that knowledge pool. So in a sense, I'm trying to sort of, as well as a lot of our guests on Misfit, are glad to be able to pass on some of that knowledge. In this case, um, in the class, in the course, it's much more structured, that allows you to have a progression to lean against these uncertain times. In the Misfit happy hour, it's much more of a freewheeling. This is what today was like, and how did you cope?
Right. So you start out and you were obviously learning from people, on the floor and everything like that. But was there a time that you said, this person's having like a seminar on whatever market
Yeah,
profiling?
I went to everything I could. I saw Victor Niederhofer play a piano barefoot at a Barnes and Noble in the World Trade Center, which was supposedly a lecture on trading. I saw um, Steve Neeson teach candlesticks. I asked him, now right at the beginning of 24-hour trading, I was like, well, where do you draw the line in the candle if the markets are open all the time? And he's like,
Right.
I don't have an answer for that. So, I mean, I walked out. I saw Bob Farrell many times. Bob Farrell's boss, when I was very young, in the 80s, was a head technical analyst for Merrill, and he came with some charts, like point and figure charts. And he said, look, just make it simple. I couldn't believe it. I was like, just make it simple. The guys on the Walter Frank, who was the chairman of New York Stock Exchange, would sign me up for courses at the New York Institute of Finance on just the curve in the treasury market, right? And here I was, I was 18, 19, learning, at night about just the curve in the bond market. Victor would teach me every morning on cycles, and he'd have oscillators, and the duration, and this primary move is this long, this intermediate move is this long, and this is the historical norm of these moves. And I was a specialist clerk for Walter on the floor of the exchange. I learned all about how the orders were stacked, and from that I learned that you could see that the markets would always go to where the most orders were, or how things like that. But in regards to teachers, they make your life way easier. Some of them make your life harder, but good teacher is priceless.
So you were always just in a mentality of like, I'll go to anything. Anything I can learn, anything I can pick up, that's going to be an advantage to me, and I'll throw out anything that doesn't work.
I mean, in the beginning, right, I knew I had an opportunity. I was the youngest kid on the floor. I knew I couldn't screw up, right? So I had, I had to make myself as smart as I could and absorb everything I could. I didn't want to leave, right? All my friends who came for summer internship jobs, they all went back to school. I stayed on the floor, and and then they, so it was the best job I could ever have.
Yeah.
And of course, right, I was a ski instructor who was on the floor of the exchange. So and then just, of course, it led to, I think there's an aspect of the teacher likes a good student, and so the teachers become invested in their students, and that helped me learn. But you have to remember too that the game is changing. It's not a static game. So like you see that in tennis coaching, I think, where one players move from coach to coach to coach as they learn the thing they can from that coach, and then they move on, and they all develop their own style.
Yeah, for sure.
So I mean, yes, I mean, it's harder now to find teachers, right? It's a super secretive, high speed trading world.
Yeah.
And all the older guys are dead. Most, with the exception of Victor and Peter. But all those guys, back to the guys I saw horrible teachers. We would go like, really, Victor Niederhofer, he was famous, and he was just like playing piano in bare feet, and then he'd rant for a few minutes and then go back to playing piano. And it was crowded. There's like 100 people waiting for him to talk about the markets. Never did. I shared a stage with Ralph Acampora, and I was calling for the market to go down, and he was calling for it to go up, and it went down. And but yeah, no, he did not like me. I mean, I didn't know him, and he didn't like me.
Yeah.
So of the teachers out there, there was Arch Crawford. He was a market astrologist. I mean, Joe Granville, PQ Wall was the guy who just used these cycles and what he called were runes, and using Heraclitus stuff. So to get good teachers, you have to sift through. It was way before the internet. We had to sift through a lot of different styles, shall we say,
Right.
to get there. So, but I do think what we're teaching now works.
Yeah, I do too.
I do too. I mean, think about it, Charlie, right? It's so nutty out there right now. For those people who are watching this years later, it's nutty. Like, the markets are moving 50 to 100 handles per day in minutes.
Yeah.
And it may not always be this way, but I'm sure that it's difficult for even the computers to keep up right now.
So what, I mean, what are things that your mentors and teachers taught you about how to navigate markets that are, I mean, maybe they never really saw markets that were this insane, but when things get crazy like this, when things get nutty, like what were you told coming up
Well,
in the
think
game?
about it. It was an all-male environment. There was no real rule that says women couldn't come, but the environment was that you needed to be loud, aggressive, and physically tall to fit in the ring, right? It was busy, it was crowded. Like these guys in the Chicago pits look like linebackers. So there's a very much a tough love. You're responsible for your own behavior. You cannot expect to get bailed out. There's no crying in commodities. If you want a friend, to get a dog thing. It's not, it was tough. I mean, commodities and as futures are as they were now were the black sheep, right?
Mm.
Everybody on the floor of the exchange, it was all in the wrist. It was gentleman's club. And then the move to futures was, it was rough and tumble. And so it was expected that you behaved like, the silver guys were called cowboys. Like
Mm-hmm.
there were people got blown out frequently, like once a week, people were just gone. So it was much
So
more of
it's
a
just like, as Lucy
bat.
says, it was grab your balls time. That was the messaging that you got, is like, shit gets crazy. That's what you signed up for. You figure out a way. And the onus was on you to figure out a way.
Well, yeah, it was the beginning. I mean, the Peter Kellogg of Spear Leeds and Kellogg was one of the most blue chip firms on the floor of the New York Stock Exchange, specialist firm. I just walked up to him in the ring. You could literally talk to superheroes in the ring. And I asked Peter, I said, why are you selling them every tick? Because the Dow's never been up more than $20. It's got to come back. So, it was, it was, it was gunslingers, bravado, courage, grit, risk like you've never seen people take in front of you with an audience. No, Charlie, there was no risk management,
Right.
right? Which is why maybe people blew out, because there was no one. If you got caught in a trade, you could average down until you blew out. That was that. So, I mean, the attitude was macho, courage. There was no gender wars, or there was no, I mean, it's a touchy topic now, obviously. On the day of the Amber Heard Johnny Depp uh, verdict.
Verdict. Well,
Uh,
so for you, wow, sorry, I'm like literally have a fucking wasp in my throat or something. Um, so for you, I mean, when you look back on your career then and you think about times when you really had to adapt, what were the toughest, like what's like the Mount Rushmore of times when you were just like, holy shit, this is a new market. I gotta change something.
January 23rd, I think it was 1986, was the first day. It was a massive reversal. I think the Dow went up from up 100 to down 100,
Mm.
and 20 people in the ring got blown out. It was pure
Mm.
pandemonium. Uh, just 87 crash followed that. It also works the other way. Like in 1994, the S&P sat, I think, in a 30 handle range for the year. So we literally would come into work and sit on the steps in the ring and not trade, because the market would just sit there in like a 3-tick range all day.
There's nothing
And
happening. Yeah.
nothing happening. So it is a constant shifting sort of sand dune.
Mm-hmm.
The understanding is that there are certain aspects that work, like you understand the structure. The process is something that's always shifting, right? It can be radical, it can be mellow, it can be there's all sorts of expressions, like the boiling frog is an expression, right? There's a grease fire rally is another expression. I mean, there's all these sort of collective behavioral phenomena that happen both in the world and then in markets as well. So perhaps a TikTok video going viral would be the same thing as a grease fire rally would be in the prices. Um, so, the structure, I think, is the element that is the most important thing for people to grasp, so they have something to lean against. And then, so how you segment data, because the market's open 24/6 or 24/5, you have to sleep, right? So you're going to need a way to segment data in a way that when you look at it, you can say, I see what happened. You talk to all of us who are trading, and essentially we're traders, we're not instructors, right? And so we're watching, and your subconscious, your unconscious gets a feel, right? And that emotional feel is generally more accurate than your cognitive understanding of trend lines and things like that. But you need to have that ability to read what you would have felt by segmenting data, so that when you wake up from having slept, you get the understanding of somewhat of a feel for the market, that emotional aspect, the unconscious element. And most traders get that, right? They understand, they have a feel for the market. And so my point is that you need a structural way to segment data against the fact that you have to sleep, so that you can read something when you wake up, and then you're back in step, right? That's your job as a trader, is to be in step with the market.
And for people who are just newer to you, when you say structure, what do you mean by structure?
They say that that's a family therapy expression, structure and process. Is that right? You hear that in your psychology stuff?
Yeah. Yeah.
Right. And so, a bad structure would be, in a ski metaphor, would be standing underneath a cornice, right? The cornice doesn't have to break off. It's just the potential, the process is the cornice is there and you're underneath it. You definitely do not want to stand there. Right. So structure in a relationship would be that you have many, many, many positive interactions with this person, so that if you have one bad experience, the process is bad for one time, you have a long history of a positive structure. Right. And so the understanding is that there's two elements to the markets. There's process and there's structure.
And so what's an example of a distinction of market structure versus market process?
Well, let's do it this way. Process is something that you observe, and you see for example, a true definition of a high would be that it doesn't spend much time there. Why is that? Because so many people are trying to sell it, right? So you can see the tail on a short-term chart, or a tail and a candlestick or something like that. And you see that tail, and you see that there is no ambivalence. Thank you, Lords, for that word. That was a great word. There is no ambivalence about people wanting to sell, right? If the price of a stock is too low, so many people want to buy it that it moves away from there quickly, right? It leaves a tail, right? The true definition of a high or a low is it spends a fraction of a second at that price. Okay, that's process, right? Repeated stabs at a high or a low will create a structure, a longer term area on a volume profile, a longer term compilation of prices. And you can see areas where the market has accepted the price for whatever reason. People view that as a fair valued price, or places where they haven't accepted price. And there's certain behaviors and trading methodologies that allow you to diagnose structure as markets move through those longer larger segments, right, of data that you can use, either market profile, volume profile. You can use the understanding of repeated tries at an area with those tails, but lots of ways to diagnose structure and process. And then the next step from there, Charlie, is that you have to understand that the markets move from horizontal to vertical, which means that there's two strategies there, right? There's the reversion to the mean type of trading, and then there's the breakout trading.
So you're essentially zooming out for a second. You're saying that through all these, having a lens like this, having a container, a framework in order to understand like the sort of chaos of the markets, otherwise chaos of the markets, helps you in whatever circumstances are going on, challenging circumstances, to contain it and to understand this. Okay, this is what's happening. This is sort of grounding me in analysis so I can make productive decisions rather than, holy shit, we keep these rips are insane. What do I do?
Yeah, in other words, you can't be perfect. You can't buy the high, you can't buy the low, and you can't sell the high, right? You just can't be perfect. So you're going to need some sort of structural background, some sort of understanding of the way that the markets are moving through time and space that give you a reason to sustain that move against you for that short period of time till it goes your way, because you can't be perfect. So it's important that you build a fundamental understanding of auction market theory, in my case, which is this structure process thing, the understanding of where you are in that vertical to horizontal relationship between the markets always cycle through, and then the reversion to the mean versus the breakout strategies and the timing associated with those will allow you to sustain what Paul calls scarification, right? That's unpleasant price move that takes a short period of time before it goes your way, because it's impossible to buy the low. And as traders, we're generally early. So you're gonna have to have some sort of mental framework that allows you, when other people are panicking, to hold on because you have a reason that makes sense. It's not some esoteric code that we're teaching. These are all things that we've learned through the open outcry market, watching it. There's economic reasons for all of this. It's not just code. And you can explain this across the table, right? It's an interesting explanation as to just-in-time inventory. When just-in-time inventory came along, the guy, like I always say, the guy who runs a lumber yard, right? When lumber got cheap, he would let the yard run heavy, and when lumber got expensive, he'd let the yard run light. Then in 1994, with the internet and Amazon and all that came along, everybody went to just-in-time inventory. And if you're young enough, you remember that. And so on Wall Street for years, it was always overstaffed to accommodate for the bulges in business. And then everybody went to just-in-time staffing, just-in-time everything. And so the idea is that everybody had to go to the market. Okay. I mean, so because everybody had to go to the market, even countries had to go to the market for anything that they needed, right? Everybody had to go to the market. Nobody carried excess inventory, which meant that the markets would go vertical when guy walks into the lumber yard, says, I need a train load of lumber. I'm going to build a condominium complex. Guy in the lumber yard's like, I don't have it. He just picks up the phone. He calls the broker on the floor, says, buy me a train load of lumber. The guy, then all of a sudden, lumber just goes straight up, right? That buyer's done, right? He's gone, he's filled. The guy at the lumber yard says, here's my plus 10% for that, and here's your lumber. It comes in a week on the train. So, but what happened in the market was that the price just goes straight up out of nowhere, right? And so you see that now, right? You see these giant moves straight up out of nowhere, and then the market goes sideways, right? That's the price becoming adjusted to this new level, but that buyer is gone. So the next ensuing inventory adjustment, whether it's going to be higher or lower, is a function of the next big customer. And so we have ways that we can look, and timing mechanisms that we can know when the markets are balanced and therefore ready for an inventory adjustment. But you see, the point is that you see that all the things that we're teaching come from solid economic fundamentals that you can explain across the table.
Right.
They're not code, right?
Yep.
It's not a code that needs to be modified. And
Yep.
because you have an understanding of the way the economy is working, the way the prices are moving in the ring, came from real economic backdrops.
Yeah. At the end of the day, it's just supply and demand, buyers and sellers.
Right. But
Yeah.
there is the understanding that the society is changing, right?
Yes.
Before the internet, things used to distribute themselves in a horizontal pattern. Now
Yeah.
things distribute themselves in a vertical pattern. And because of that, because it takes time to find the opposite side of the trade, the ranges are bigger, right? If some news breaks out, no one's going to be, and you have a bad position, no one's going to be standing there being like, I'll take your problem for you. And so that time, in the meantime, where people have got to get out of that problem, price is moving. And there's, the DOM appears to have size, bid and ask, but when you start to get the prices moving, there's no liquidity. And if you look at figures lately on the measurement of S&P liquidity, it's virtually zero, which is interesting.
When did you start to integrate your understanding of the mind, all of the sort of self-study that you had done? When did you start like consciously integrating that into your experience of trading?
I don't think there's a particular, maybe I would say Peter Stottlemyre said that, he said that if someone's long 100 shares of IBM and they're up $50, right? There's so much in the money on that their behavior is impossible to predict, right? They're at Clark's downstairs having a third martini lunch. But if someone's long 100,000 shares of IBM and it's right there at the money, and if it starts to go bad, then they've got to go, right? So one of the first lessons I learned was that people whose needs aren't getting met are much more predictable than people's needs who are getting met. That was Pete Stottlemyre, creator of Market Profile, who's still alive, and he made 70 million, by the way, trading grains. Not bad, right? So the understanding of someone who's not getting what they want is much more predictable than somebody who's getting what they want, led me to the understanding that it was important to understand the other side of the trade. There's someone taking the other side of every time you hit the mouse. And so I had to all of a sudden, become so much more three-dimensional game. Like all of a sudden, like what's their thinking? What, if you don't know who the mark is at the poker table, you're the mark. So I was trying to make sure that I wasn't the mark in regards to the perspective of my opponent in the trading. And then once you get past that, then you need to understand that once you have a trade on, you have the tendency, not only, your biases are crazy, but you think you're better than you are, and you think you're right always, but you have to also make sure that you're not misjudging the market because you have the inner cheerleader going with every tick, like this is good for me, this is bad for me, this is good for me, this is bad for me, with every fluctuation, and understanding that you're not seeing clearly if you are viewing reality through the lens of how it affects you, when in fact no one else cares. No one else cares. So you have this myopic, solipsistic perspective that you're not even aware of, which also influenced by Dunning-Kruger and confirmation bias. It's a miracle that anybody can even get past that. And so
for people who don't know, Dunning-Kruger is a sort of dynamic, a psychological effect where people who are less competent at something tend to overestimate their ability at it, right? So a really shitty tennis player is more likely to think that they're going to go out and do well against, in a tournament or something, than somebody who is actually really good.
People overestimate their ability. 70% of people polled say they're above average drivers. So I just, okay, but so the understanding is most cognitive thoughts have a problem of confirmation bias and that Dunning-Kruger element to it. And then the next psychological hurdle that you need to get over is the understanding that inner cheerleader will allow you to have a party when the trade's going your way, and then you'll misjudge reality in regards to the expectations or how the market's unfolding, and whether you should add, whether you should get out, or whether you should just hold your position. And so the evolution, it sounds so simple, but the actual mental aerobics that you need to go through, mental pliancy in the face of high speed price changing action and money on the table, is really a superhuman capacity that which is why I think a lot of people fail at trading. They're not even aware of the mental aspects and both Charlie and I have tried to teach this, and I think to some degree we've been successful, but we've taken heat from a lot of serious traders who've said that what we're trying to teach is unteachable.
Mm. Yeah. And also we've had traders say, I don't know how the hell you're actually teaching that, because it's so the rabbit hole goes so deep for so many people, and it goes in so many different directions. And it's like I'll teach market structure, options theory all day long, but do not ever ask me to teach the psychology of trading, because that just seems so hard.
We do have a logical progression, and we do have a lot of positive feedback on our forays into trading psychology, and you are your worst handicap, and that's just the way it goes. And you have to write yourself post-it notes. You have to pat yourself. There's no one going to pat you on the back when you don't make a mistake that you've been making. I mean, that's a victory to yourself, that all these victories lie within ourselves, and on the trading floor was all your competitors. They wanted to see you, they really weren't invested in you making yourself better. So I mean, it's a lonely path, but I think it's important that you become cognitively and emotionally pliant in regards to your behavior around high speed decision making under stress.
So that leads me to my next question. So what is your advice to people right now who are just like turned completely upside down? They feel like they're in a never-ending car wreck, and they're like, I don't know how to get any traction in this market. What do I do?
Start with some structure, right? Find something that you can lean against. Go out in time, right? A lot of people say that the longer time frames always win over the shorter ones, which would be structure takes over process. That's debatable, because we've seen process overwhelm structure, right? You can have 3 or 4 or 5 or 6 bad experiences with a person, and that does change your opinion, right, of the prior 40 good things you had. So back to Charlie's question. I come in and I look at the longer segmented data stuff, and then work to progressively shorter time frames, because the shorter time frames are much more variable and change. So write down what you think as areas that would be structurally significant. And in the case of the class, we teach, what is a high, what is a low, what to look for, what is the definition of that. When you get to a place that has been accepted as a price, a wide spot in a profile or in a volume profile, what strategies do we use there? What are the time frames associated? What are the psychological aspects that we're thinking about? The mental mindset to apply. In other words, if you walk in the day, as Charlie says, you have no idea what you're going to do, you're kind of screwed, right? If you're just chasing tape, it's like you're a fish chasing after a lure, and you're going to chase anything that is shiny. It looks like this, and then you're going to go that way, and then it's going to, there's a structure behind the market that is real and it works. Okay, and so you can find it yourself, or you can come to class, but it's real and it's out there. So the idea is don't get caught by just chasing the tape. Like, integrate the structure with the process. So where were we? We're talking about if there's a particular mindset, there's a strategy involved. For example, if the market's at a wide spot in a profile, markets go vertical. markets go vertical from those wide spots, right? So what you walk in the morning and you're like, okay, if the market's at this wide spot and it's been sitting here for a while, by default, it's ready for a vertical move. Okay, so what's our strategy in that case? We're going to buy strength and sell weakness, right? We're going to go with it. But if we're in a place where the market's already gone vertical and it's now chopping around in the beginning of that chopping around thing, we're doing the exact opposite, right? We're buying dips and we're selling rallies as the market becomes more balanced. So you see that you have a blueprint for the understanding of if, that are completely 180 degrees opposite. And that's just a small tidbit of understanding of where you are in that market structure and how it plays out. So the understanding is, again, if the market sat at a balance point, a wide spot in a profile, all vertical moves happen from those balance points. And then if it's not in one of those places, and it's just, it's just a fresh vertical move is happening, it's starting to chop sideways, then you're buying dips and selling rallies as you're waiting for that vertical to be bled out into a horizontal process. But you see that it's a completely different 180-degree strategy. And just knowing that when you walk in today, I'm buying dips and selling rallies. Or the other case is I'm going to go with whatever vertical move happens from that balance point, which is buying strength and selling weakness, right? Which is 180 degrees understanding. So, and then understanding that the market spends 80% of its time in the reversion mode, which is fading, right? As you're buying weakness and selling rallies, and then only 10% of that time in the breakout. So that you can predicate your behavior for that day on the odds of what the probable behavior of that day is, because 80% of the time is on reversion. And then I can, of course, we'll show you how to build a reversion program and then how to participate and build a very simple charting on how to build but you can do this yourselves. You can, you can figure it out. But just the blueprint of understanding where you are when you come in. You're not just shooting from the hip. You're not going to be a dead gunslinger. You're going to have rules. You're going to have a blueprint for how to participate based on where the market is and how it arrived there. And so that at least gives you a shot, and that the ability to sustain a price move against you because you have a probable action or result that makes sense. It's not just code that's predicated on some black box. That makes sense?
This is why I love doing these conversations with you, because someone just spoke up in the chat and they said, okay, that was fucking gold. And if you like isolate any 5-minute segment of this conversation, there's pure gold in what Chris is saying.
Yeah, I mean,
if you can just kind of open your mind to some of what he's talking about.
Right, you guys here, just build on a 30-minute chart, take a 65 on a 30-minute chart, take a 65 period moving average and a 33 period moving average. And just when the lines come together, the markets are balanced, okay? It's not a crossover system, and it works on anything, okay? And I created this when the trade centers came down and I lost all my profile stuff in all my computers, and we were in a warehouse in Long Island City, and I had to quick and ugly create. I didn't have any of the software, none of the programs. And it was predicated on the fact that it takes an average of 130 half-hour periods for the S&P to go through its vertical to horizontal balance period. So I just chopped it in half and made a chart. It's 65 and 33 periods on a 30-minute chart. And then just watch the market get balanced, and it's not a crossover system. Okay, and so you'll see the market cycle through vertical and horizontal. And that's a very quick and dirty way. I mean, obviously we have a much more sophisticated in this, these days, it's very simple that you can do it down to the microsecond level of balance and vertical. But yes, I appreciate that you think that it's good, and it is good. And so that's a quick way to understand the vertical to horizontal and have some sort of blueprint that allows you to see where you are in that respect. Or put it this way, you won't be fading the market when it's balanced. You'll be like, that's just a recipe for disaster.
I was just sinking in for some of you. I know that I'm looking at some questions in the chat, so we're going to get to those. If you're listening to this and you're like, hey, this guy really knows his shit, or hey, this guy seems like he really knows his shit, but I don't fully understand everything he's talking about.
Still here.
Chris teaches all this in the master course. Like I said at the beginning, $500 discount on the master course up until the live session starts on Monday, which is June 6th. So you can use coupon code master500 if you go to stanglucci.com/MC.
We're all traders. We're all traders, Charlie. It's important for people to know that, we're not teachers by trade, right? We're all traders by trade, and we have all paid our dues, and we can tell you all the stories about people blowing out, us blowing out. So
yeah, this is all coming from lived experience. Everyone who's teaching has, money in the markets on a daily basis, money on the line. They are also, I think one of the things that differentiates us is from a lot of people who are out there who are just like a single trader who are running, who are just offering their courses and stuff, is there's a whole team behind these guys. We put a lot of time and effort into supplementing the experience with resources, thinking through the pedagogy, right? Like the how are we teaching this information? Like what is the flow of this? How are we breaking this down? What's the curriculum?
Sorry to interrupt, but what's really cool is we struggle a lot with what to teach because it's got to work in the future, not what's worked in the past. So I think that's what's different between what I've seen on YouTube and what I see even among my peers who are fairly famous now, is that I can't believe that they're still they're teaching stuff that hasn't worked for a long time, and of course people don't know that, I guess, when they sign up, to the point now where we're working with people who are developing artificial intelligence, so that it's important to understand that we're teaching you along the lines of how to think, so that when artificial intelligence comes along, when it's here, you'll be able to program the strategies predicated on real economic behaviors from what we've seen in the ring, which work, into artificial intelligence on your own. And that will be both your own creation and one that works. And I think that forward-looking element that we've struggled quite a bit, and we've put all of us, Charlie, myself, have all put a lot of thought into the understanding that we don't want to teach stuff that is perceived as a wagon wheel. We want stuff that is helpful 5 years from now, not last week.
Yeah. Yes. Well said, Chris. So I got a question from David. Chris, how has your time frame changed throughout the years? Were you more of a scalper on the floor, and now has that changed now that you're,
is it David, right? David. Yeah. Most recently, David, I'm starting to think of it like this. I'm thinking like, okay, we know the ranges are huge, and we know that the confirmation bias of people must be really high because the ranges are huge. So when someone's right, they get rewarded monster. So they've got to be super sure that they are right. They're just like Superman, right? That feeling's got to be everywhere. So to answer your question, in the ring, I was just, take the money, scalp things around. And I had no real understanding, as well as you had a guy tapping you on the shoulder and say, just buy them, and you just get the edge and you'd flip out of them. And now trading on the screens, you can't do that. My thinking now, back to what I was saying, is this hubris. I want to execute into that hubris. I want to take the other side of that hubris. And then I want to, it's a really interesting feeling to be uncomfortable in your position while everybody else with their confirmation bias is so sure they're right. Because then the market starts with when everybody's into the trade, then the market starts to go the other way, right? That's when everybody's in, is that hubris that I'm talking about. Then I'm selling into that, say it's a rally. Then I'm waiting now when the buyers are unsure and I'm unsure. But I know that I have more fuel on the downside because the forced awareness move when someone's wrong. It's that analogy with the guy who's got 100,000 shares of IBM. He's got to be wrong. He's got to go. So my thinking now is that I'm going to execute into the hubris. I'm going to live through the uncertainty, but so is the other side of the trade. And then when I start to see people realize that they're wrong, I'm trying to be more patient and let that forced awareness play out, because all those people have to exit. And that awareness point is where you make the big bulk of your money. So that's where I'm at right now. I'm trying to execute into hubris, fade into the wicked confirmation bias, that living through the uncertainty as the trade works your way is because it's super tempting to take the profit. But if you get to the point where that they are forced that they're out, then it's a huge payday. And it's a good risk reward, right? Because if you're executing into the hubris, it's like all the king's horses, all the king's men, everybody's in that trade. And then you've caught them all off sides. But the mental part, the hard part, is sitting through that uncertainty as the trade works your way, because it's so tempting to take the easy money quick.
Right. We got another one, which is essentially asking what was the closest that you ever came to feeling like you couldn't like adapt again, like you couldn't adapt to the challenge, and then how did you get through that?
Even recently here, between all of us instructors, we sit around and we say, you know, this is so wild. Like, you know, what do we do? And on Misfits, we talk among ourselves about what can we teach? How can we teach this? So I would suggest that even now is as difficult as I've ever seen in the markets. And so I hear that. I mean, even last Friday they were up 8%, and you know, I ride my bike home, and I just said the entire way home, I was like, this is just a joke. They can go up 8%. So I think that's an increasingly probable outcome, is that we're going to continually find it more psychotic, more quick moving, and you're going to need to make sure that you have your emotional house in order. You can't show up and trade tired. You need to have solid reasons for every trade that you make, because you know, it's in the old days, right? Like today, even near the end of the day, they must have bumped up against the highs 10 or 15 times before they rolled over 20 handles. And that, just think about how hard that is if you're trading size and you know, you're afraid of it, you know, you have anyway. The idea is that yes, it's been difficult for the entire 40 years. It is more difficult now than it has ever been.
Yeah, that's quite the statement. Damn.
I don't take pleasure in saying that.
Yeah. Wow, that's wild. Yeah.
Yeah.
But then someone else just said game on. Like, this is also where
yeah, you know, Paul said that the other day. Paul had lost 100 grand on silver, and he was like, bring it on. Yeah. And I was just like, he's like, yeah, bring it on. We have opportunity. And I was just, I mean, okay.
Right.
Jesus.
Yeah, I mean, this is definitely going to be a period that skims a lot of the people who weren't doing the work off the top, you know, and the people who are left after this are going to be committed and have a process and have a method, and you know, they're sticking to it. So they're sticking in the game.
You know, things are changing, Charlie, right? You have, you know, inflation, you have the $9 trillion balance sheet that's got to be unwound or bled off. You know, I mean, you have geopolitical events, right? You know, imagine China just rolls into Taiwan. I mean, the chips are more valuable than food.
Yeah.
I mean, today I saw the 300 calls in crude, 5,000, the December 300 calls, 5,000 of them traded 16 cents.
Shit.
How much is gas in California right now?
It can be like, I mean, it can be like $7. Yeah.
Is it? Yeah, it's 6 something, right? And so
yeah.
that would mean gas would be over $22 a gallon.
That's fucking crazy. Yeah.
Right? I mean,
anything is possible now, man.
right? Anything
It's the world
is
we live in.
possible.
Yeah.
I mean, I maybe would you buy a bicycle company? I don't know.
Right.
I don't know. But it's very difficult, no question. And anybody who's experiencing it, it's extremely difficult. I mean, myself, the things that I'm doing, I'm going to bed at like 9:30, and trying to sleep as much as I can, which leaves you waking up at 3 in the morning, just like flipping out. I'm drinking less. I'm exercising my butt off.
Yeah.
I'm using, anything I can find to give me an edge, and I'm also tuning things out that are distracting. And there were people who are probably complaining that it's affecting my outlook towards them and things like that. And I guess I don't know, but I would have to assume that we're all being affected by these sort of violent, traumatic, almost psychotic price actions and stuff that we have to deal with. It's like I said a long time ago, I said it's like we're playing chess with a psychopath. But I think it's worse than that now. I think we're fighting for our life.
I fight with the psychopath.
Yeah, like definitely do not argue with anybody on the subway, people.
That's a good piece of advice right now.
Yeah.
All right, we'll get you out on this one, Chris. What's your favorite mountain to ski in Vermont? We got a UVM alum here.
Oh, I mean, Hellbrook, for people who don't know, Mount Mansfield is the highest mountain in Vermont. I taught there weekends for a couple decades, both skiing and snowboarding. Um, but Mad River, if it ever snows, is fun if you can wait at the top and find a guy with telemark skis and a beard, and then you just you follow behind him at a respectful distance. But Mansfield is great. Unfortunately, to my friends who love Mansfield, it's an epic pass situation, and now they're going to charge $30 for parking. So it seems as though the luster is, I mean, certainly hurt. The town is overrun with people, and you can't get a cell signal, and internet service is a bitch, and so it's changed. It was $1,800 for the pass before Vail bought them. Now it's $600. So just there you go. You have 3 times the people.
Vail Resorts.
And Charlie is a Vail resident, or was.
I grew up in Vail. Yeah, I was never a resident there, but yeah.
And so, but I mean that's too obvious. I mean, yes, the people in northern Vermont try. This is my friends who live there. Try and say that southern Vermont is not part of their state. So yeah, and for me it was
I did not know that.
Yeah, and for me it's 4 hours and 40 minutes from here. And I think on a side note, the reason why I'm still single, not married, is that I spent a lot of time skiing there and making the commute. Mm-hmm. Because no young lady would like to go ride the quad or ride over the front 4. Typical weather in Vermont is 5 degrees blowing 30, and then it's you can see your reflection in the snow on the way up, which is like blue ice.
Dude, I grew up skiing and I don't even want to do that. That sounds
right. So, but to people who are watching, the tree skiing in Stowe is really good. It's hardwoods. It's super solid. It's a world-class ski area. And it has snowmaking, which is something Mad River does not have.
Word. Chris, thanks as always for doing this, man. Thanks for being here, sharing your experience with everybody. Thank you everybody for being here. And tomorrow we'll be right back at it after the close. I'm going to be talking with Spencer Regal about basic crypto and his participation in the course. So that'll be a really interesting conversation. Flip side, man, somebody who started trading when he was like 17 and he's 24ish right now. So he's got a good bit of time under his belt, but relative to Chris, he's still new to the game. So
I highly recommend Spencer. I'm a big fan of Spencer, and I'll teach him if he ever gives me a chance.
All right, guys. He's really Thanks, good. Everybody. We'll see you tomorrow. Thanks, Chris.
Yep. Bye.